What's up, guys? We got another video for April 3rd today. Today I'm pretty much just going to be going over my strategy and what I've been trading for the past year, what I've been collecting data on, and until we got my first payout, pass some accounts. Gonna stick to the strategy and keep it going. So I don't really trade rules to my strategy because I trade discretionary, which means I don't have like a certain entry ticker, like not an IFVG or like limiting fair value gap tap or any of that. I kind of trade off of what I see in the market and what I've seen before and what looks good in my opinion. But I like to say three conditions because I need these conditions in price in order to take a trade, and that's I need a good draw on liquidity, I need volume and a clear trend in the market, and then I need a retrace because I don't want to top blast or bottom blast and catch the bottom or top of the entire retrace. It's terrible. So, continuation strategy. We know the market moves making higher highs and higher lows. So, how do I trade like this? Let's say this is the 4 hour time frame right here, right? Every time we're moving up, we're taking out a high. Retrace, take out the high. Retrace, take out the high. So unless we have draws, let's say over here, let's just say we got some stuff over there, then I'm just targeting the next high and the leg up. So in this example, let's just say we have this high. All right, we got a high over here. What do I look for? I look for price to continue this uptrend and take out the next strong liquidity, which would be this high. So now we're retracing into some gap right here, let's say. What do I look for after this? A nice displacement towards the draw on liquidity, showing me that we want to go back to the upside after this retrace. And that's where I would take my entry with a stop loss below the low because I don't believe price should take out that low. If we are truly bullish, it wouldn't really make sense for me, or it wouldn't make sense to me because a bullish trend is making higher highs and higher lows. So if we wanted to go take out the low, we'd be making a lower low, which would be a bearish trend. So this is pretty much what I want to see in my setup. I don't need nothing, no liquidity sweeps below. I don't need a certain low to be taken out. Literally just need a good draw on liquidity, market to actually be trending towards that draw on liquidity, a retrace in price, and displacement towards the draw on liquidity, and that's pretty much my entry. Very simple. Just a simple continuation entry, nothing crazy. Um, but main thing, we're gonna go over when not to trade now, but the main thing is price needs to be actually trending and moving somewhere. You can see high time frame right here. We are stuck inside this range for weeks on weeks. And I'm thinking to myself, I'm trading these weeks. I'm like, dude, I just got a payout. Like I can't do shit in the market now. I'm just bullshitting around. I haven't taken a single trade or I haven't taken a single good trade this entire time we've been shopping around. Literally would just lose after lose after lose, break even, lose, break even, lose. It was terrible. And I was like thinking, I was like, dude, what happened? Like I lost all of my knowledge. I just can't trade anymore. And then I saw us finally break out of this range and start actually trending towards the downside and actually taking out some of these drawn liquidities. And I started winning. I won like 3 trades in a row. I haven't lost in like 2 or 3 weeks. So I got thinking, I'm like, damn, it's really like a wake up call that I just need to like lock in and like only take good trades. And that kind of helped me realize like how much these conditions matter and how much we need to be actually trending, because a continuation is when we're continuing to the draw. This would be a continuation because we're trending up. This isn't nothing. We're just chopping around. So that helped me realize the conditions I need to be trading in and why I was not catching good trades or nothing. um, but yeah, let's go over when not to trade though. So we just figured out we don't want to trade when price is shopping. High time frame or low time frame. We do not want to trade until price is chopping. Price is chopping on, let's say, the 1 minute, then we go up a time frame. We go up a time frame to the 5 minute. Price is chopping on the 5 minute. We go up. We go up until we find a time frame where price is actually moving, and we wait until we see something that we can take. Um, we just do not want to get stuck in these choppy conditions. Another thing that I like to do, I don't trade in between gaps. See, yesterday we were stuck in between both of these daily gaps. Now, I don't want to trade any of this. I have no idea if price is going to go lower or go higher here. We're just bouncing in between them. So I told myself yesterday I'm not going to trade, and I know some people caught some clean longs to this 4 hour gap, but that was not for me. I told myself what I wanted to do, and I stuck to the plan. All right, when else do we not want to trade? No draw on liquidity. Where did my thing go? Not there. No draw on liquidity. If we don't have a draw on liquidity, like yesterday, for example, what are you taking a trade to? You have no idea where price actually wants to go. You're just guessing in the market, and that's not how you're supposed to be trading. You need to have a set plan. Let's say you had these highs. If we do not get an entry to this high and you just bullshit a trade into this giant 1 hour gap, what are you taking, you know? Or if you try and go lower here, so you try to took a nice displacement down lower here and you had an actual draw. What are we taking a trade to? Like, to be for real, we're sitting in this big 1 hour gap, 4 hour gap. We've got no lows below us. We're kind of just guessing that price will dump here. So things when we're not trading, price needs to be moving, price not choppy on low time frame or a high time frame. Clear draw on liquidity. If it's not a clear draw on liquidity, then just what are we trading to? It doesn't make sense. When else do I not trade? When price is moving pretty slow, I will not trade as well. We could see how slow and choppy this price has been right here. Still, I mean, it shouldn't be. It's after New York AM. But look at this. This is some volume right here, actually displacing towards the draw on liquidity. And then we fall off and we just jump inside this range. So when price is looking like this and we don't have any volume, I'm definitely not trading. I'm sitting hands off and I'm not doing nothing. There's the next one. Another time not to trade after the draw on liquidity is taken. I had a good example of that the other day. Let's go and find it. To my Discord. Free Discord, by the way. Come and pop out. Look, took this short. We dump, great short, take out the draw on liquidity, chop around. I don't trade after a draw on liquidity gets taken. There's no point. It's been proven over time that we just chop around after we take out. Look, you could say this was it yesterday. Take out this high. What do we do after we take out the high? Just chop. We don't do anything. Just sit in the range, chop, chop, chop. So I did not trade after we take out a draw on liquidity either. It's just proven that doesn't work. You guys need to get your own data because that is the whole thing about this. But my data, I've seen time after time where we take the draw on liquidity and we won't go get the next one. Like, see, we have these highs up here. We took out this one and we just shop around. So I don't trade after a draw on liquidity is taken. It's just more probable for me and my strategy. But I mean, if you have your own data on it and it works for you, go for it. Not going to hate on it. So let's show some examples now. All right, here's a good, I took a trade this day. It's kind of just going to be like my recaps, but not an actual recap. Brother, shit is cooking me. Here we go. Alright, this is a trade I took. Here we go. So, what do we see here? Price is rejecting both of these 4-hour gaps. We didn't tap this one above yet. We are strongly rejecting this one. We have a 4-hour gap below us that is untapped, unfilled, and in order for price to continue either bullish or bearish, we need to inverse this gap or we need to tap it to go higher. So having this in my brain coming into market open, I'm like, all right, that we're about to go lower. No way we don't go lower. So all I need to see is a retrace displacement, which we get. Retrace, take out all these highs. Price immediately starts flipping and flips bearish. We get a great 5-minute candle. You can see the wick is really showing that we rejected these highs and we closed bearish. Take my entry with a stop above the high. Break even at the internal low, and we TP'd down here. Ended up playing out. We didn't get break even, and let's just make sure we have the 3 conditions that we need, which is draw on liquidity. We had some nice stacked lows down here. We also had the 4-hour even lower, which was the main target. Then we need volume and clear direction and price, which we can easily be showed with this 1 5-minute candle. Look at how small all of these candles are right here, and then our 1 5-minute candle invalidates the entire retrace right there. So that's my next condition. And the third condition is the retrace, which we did get coming up here. You could say this entire thing is a retrace into this giant 4-hour gap, but I would just say this, and then maybe the sweep of this highs was a retrace into a displacement candle. And that's the 3 conditions I need to take a trade, and this one ended up playing out, which is nice. There's another one we took this night. Go to it. Go to the hourly. Somewhere around here. Yeah. All right. So what do we need here? We need a clear trend in price. Price is rejecting this low and flipping bullish. Also, at this time, I want you guys to know that Trump did release news, bullish news about the war. So I also had that in the back of my mind that I was like, all right, this could be the time where we flip bullish. We'll see. What do we have higher? These highs, we've got these highs, we've got this high. I'd probably just target these highs because they're closest. So perfect. What do we get? Displacement towards the upside, confirming that we want to go higher. Retracement into the 5-minute gap. I use this 15-minute as a breakaway gap, which pretty much means that I don't expect price to come down and take out that gap because it's a breakaway gap, meaning it won't get tapped. So after we get this, invalidating our retrace, take my entry. I targeted a 1.5 R because I need a 1.5 to pass my account. So we played it like this, break even at the high, break even. Oh, we get retraced on. I think we actually TP'd earlier somewhere. Yeah, I don't know where we TP'd at, but I already went over this trade before. That's a W right there. Let's check high time frame. I'll show you guys how price is fractile, meaning whatever happened on the low time frame can also happen on the high time frame. Here we go. I think this actually ended up playing out. I'm not sure, but that's the bottom, so we won't do that. Choppy price. All right, here we go. Let's say we're punching to the downside here. Got this draw lower. Boom, we put in a retrace. Boom, we get a nice displacement candle. Entry right there. Stop loss above the high, targeting that. There's another great example in the high time frame showing how price is fractile. And whatever it does in the low time frame can happen on the high time frame. So there we have it. Look for another one. Moving lower right here. Say this is our next draw on liquidity. What do we get? Retracement, displacement, bam, bam. Stop loss of the high, bang, another trade that plays out. So yeah, you really can take this and like only trade high time frame, like 4 hour and 1 hour, which would be pretty sweet if you're able to do that. Say we're at all-time highs here. So let's just say we want to go higher, we want to take an entry. Retracement, strong wick showing us rejecting that area, stop loss below the low. And then if I'm ever trading all-time highs, I normally take it at like a 1-to-1. I'll take some of my position off at a 1-to-1 and then trim more later. But I ended up playing out. And that is pretty much my trading strategy. Just need to draw on liquidity, volume slash trend in price, and then a retrace. That's all I use. So hopefully that helps some of y'all who doesn't understand the strategy or what I trade. But that is pretty much it. Peace out.